Go across to my colleague Sharad to understand of how the retail participation has been panning out in the equities over the last few months. Sharad, take it away.
Well, yes, there are major factors actually spooking the market and hurting the retail sentiments. And of course, in a short-term basis, there's an absence of major macroeconomic trigger. And apart from this, even there is a lower trading volumes coming in. And because of that, the liquidity numbers are also being impacted in the trading space as well. Of course, the FPI fallout is also happening over here, where the numbers are actually coming down over the last 2 months itself in the month of January and February. Apart from this, Adani Group route was also there, which actually impacted the market sentiments as well. Now, speaking of that, inflation has actually not fully peaked out yet, and a lot of money, FI flow, is actually going to China and Taiwan, especially on the reopening theme as well. And the valuations are still remaining pricey as compared to the emerging markets. But let's look into the data. On the long-term basis, the SIP levels are still pretty at a strong levels, at the record high levels of almost 14,000 crore rupees for the month of January. But the interest in the retail, as we have pointed out, that has dipped. And if you see the NSE active users, that numbers have come down and it's below the 35 million mark. And do remember the retail turnovers numbers are also coming down. Now, what is the case over here? Staying investment in the long term for Indian markets, and of course we have taken 3 asset classes. We'll talk about investing in gold. For MCX gold itself, you see the numbers over here on a 15-year basis, it has given a 118% return. Now from gold, we move to the Nifty index. Now had you invested over here, between 10 to 15%, your returns would have doubled, and that would have been as high as 230% on a 50-year basis. Now deposit rates also, the movements have happened. And over here itself, we see the returns were gyrating between 6.5 to 10% on a long-term basis between 5 to 15 years. So this is your case for a long-term investment. But is the outperformance of the Indian market over? That is something which you need to ponder upon. Over here we see on a 3-month basis itself, Nifty has fallen almost 7%, while its peers have actually come up on a positive note as well. Now let's look at the mutual fund space. That is also very interesting. If you stay invested in the mutual fund space, what returns you can expect? And this is the 10-year returns which we have taken, and of course these numbers are on a compounded annual basis. And over here, small cap and the mid caps yielded roughly 19 to 17%, while you invested in a thematic mutual fund scheme like IT would have given you an 18% return.
Thanks very much, Sharad, for giving us all of those details.